Good morning, good afternoon, and good evening, folks, depending on whatever time frame that you guys are based in. I am based in London, so good afternoon from myself. First thing first, if you guys can hear me perfectly and you can also see my screen, please do give me a sound and a screen check by saying yes or no. Great. Thank you so much, Simon and Khashar, Vivian, Alex, and to everyone else. Thank you so much for that, and I hope you guys are well, and of course the rest of the participants as well. So today's masterclass is quite an important one, given what is happening in the markets, or given the fact that what has been happening in the markets for the last number of weeks. So we are going to dig deeper into the markets, into the stock indices, and then we will discuss where are the opportunities for investors and traders and the reasons behind the current sell-off. We will analyze things like why this particular sell-off has happened, and if there is a possibility of the current sell-off to accelerate or change its current direction. As always, every Wednesday we do this master series, and every Wednesday we do cover different topics. It's never the same topic. Today we are going to cover indices, and we will talk about indices from the perspective of a newbie traders, and of course we will dig deeper into this one, and that will answer many of the questions which pro or more experienced traders would have sitting with us over here. Now, before we start, a little bit information about myself. Some of you would have already recognized my voice by now. If you haven't, my name is Naeem Aslam, and I work as a chief analyst for AvaTrade. My Twitter account is right in front of you, so do hit that follow button to get all these up-to-date information. About my experience, I have worked 15 years in the trading environment, and during this time period, I have worked as a hedge fund trader for Bank of New York Mellon and as an equity trader with Bank of America. And some of you may have seen me on TV channels like CNBC, Bloomberg, or any other similar TV media where I do regular weekly appearances. And again, the Twitter handle is right here, that Naeem Aslam 23, if you like to follow. Now, as for social media channels for AvaTrade, they are right in front of you. Cannot recommend enough to follow and subscribe, because the recording of this webinar will also be uploaded on our YouTube channel. In addition to that, there is we post daily analysis there as well, and the market updates on our social media channels. Now, something that I kind of wanted to share with you guys is the AvaTrade's unique technology, AvaProtect, which is a revolutionary one-click risk management tool available on the AvaTrade web trader and AvaTrade Go app. With AvaProtect, you can purchase protection against loss for a defined period after opening a position. If the protection ends and you have an open position that is losing, AvaTrade will reimburse the loss directly into the trading account. The only cost is, of course, the AvaProtect fee itself. Now, the agenda, what we would be discussing in this particular one, is right in front of you. So what we are going to begin with, we're going to begin with the first and the most important question, which is right in front of you guys, and that is why to trade indices. Do you guys, anyone wants to take a stab at that? Anyone wants to look at that? That why? What are the importances, or what are the important factors for this particular one, why it is so important? What are the benefits? Let me just ask that. What are the benefits for trading indices? The first answer which comes and is right on the money is because it provides a really great hedging technique. Now, what the person wants to say is because let's say that we are talking about the US 500 index, right, which represents the top 500 companies, or the S&P 500, also known as the S&P 500, top 500 companies in the United States. Now, by buying this particular index, you have an exposure to all the 500 top stocks. So that kind of gives you a wider exposure by buying this particular one. The second benefit, which is right on the money as well, that they are good for day trading, right? Because if you are looking for that particular, supplement income and you wanted to do day trading, then this particular product over here, the US 500, the US 30, can anyone give me one more index, please? So this is your Dow Jones, right? So your Dow Jones index, the Dow Jones index. This is your S&P 500 index. Can anyone gives me a name of another index? There you go, Terry. Absolutely right. Terry, how are you, man? I was chatting with you this morning. So a lot of you guys, you do kind of come into the, you follow me on Twitter, and then you do ask me questions on that, and then you can ask Terry that I am very, very active in, well, try to be as active as possible to answer them, because we do get plenty of them. So yeah, Terry is saying NASDAQ, which is quite an index right now because it is down year to date by nearly 24%. That is a whooping pretty decent discount. NASDAQ. See, this represents your top 100. The syntax is, the symbol is US 100, and this represents your top 100 tech companies in the United States. Again, we had hedging, right? And then we had day trading as a benefit, right, of that one. So both of these ones, that's why we kind of wanted to do that. That's why we kind of wanted to have them in there. Can you give me one European index as an example as well? Yeah, okay. So FTSE, exactly. So FTSE 100, or the UK 100, also known as, so that represents the top 100 companies in the United States. So these are the indices. So you have your NASDAQ, which is US 100, you have your FTSE, which is your UK 100, you have S&P 500, you have your Dow Jones, and then DAX. The list kind of goes on and on. Ria, you are absolutely right. And yes, Terry, you are absolutely right as well. So here are the list like FTSE MIB. What is FTSE MIB? Can you guys tell me what is FTSE MIB? Which particular market is this one? It is a European index. I'll give you that. FTSE MIB is actually an Italian index. Even though it says FTSE, but it is an Italian index. This represents your Italian stock market. And IBEX, what do you think is IBEX is? Which market, which country it represents? Again, it's a European one. Absolutely, Ria. This is Spain. This represents your Spanish index over here. So that is what we're already talking about. So again, a lot of people will trade them because, and another advantage of that. So tell me what are the advantages so far for trade them. So one is hedging, one is day trading. If I can write it right. And then the third one is for accounts with a smaller deposit. Okay, so because remember that if you have only $10,000 or pound or whatever, you can only invest in so many stocks. But when you have, those $10,000 and you invest in trade in any of those indices, the one that we discussed before, you get an exposure to all of those ones at the same time as well. So you have an exposure to NASDAQ, you can buy a little bit of a NASDAQ, you can buy a little bit of S&P 500, you can buy a little bit of a Dow Jones. So you can really have you can really have exposure to across a lot of different stocks, a lot of different companies at the same time with a smaller account. So here, you have a 500 stocks, right? Over here you have 30 stocks. Over here you have 100 stocks. So how much altogether over here? How many stocks do we have in exposure altogether by going for an indices? 630. So for smaller deposit, for smaller accounts, if you buy all the three of them, that is equivalent of buying 630 stocks. So you can imagine how much money you would actually need if you wanted to buy those 630 stocks. Now, the inverse of indices. So please tell me, what does this mean for those of you who have actually invested or who have actually attended these ones? What is an inverse index? I'm going to give you a clue. I'm going to leave you that on the screen over here. Exactly. Absolutely, Riha, you are absolutely right. So basically, we have S&P 500 index, right? Which is your index, which we all know, or the Dow Jones index or the NASDAQ, right? The VIX index on the other side moves in opposite direction to this one. So for example, when this one goes up, this one goes down, right? When this one goes down, what happens to this one? This one goes up. That is a relationship between that. So right now, this VIX index is up year to date nearly 90%, right? So doubled its value. This one, S&P 500 index on the other side, is down minus 16% year to date. So you can see the relationship in that. So if you are not sure about how far the market can really go, if the market is going to continue to drop, you could look at the volatility index, and the symbol on AvaTrade's platform for this one is VXXB. That's the symbol for the volatility index. So again, when the markets are going down, you can obviously buy them. When the markets are going up, you can buy this one and then you can short this one. So that way you can double your potentially your targets or your profits on that particular trade. Similarly, when this one is going down, you can short this one and then you can go long on this one. Again, you have the opportunity to have double your profits by doing that. Now, of course, there are risk elements to that one as well. But right now, volatility index, where it is currently, I would be very, very cautious to go long on the volatility index, or I would be very, very cautious to go short on the US indices. Because like NASDAQ is down by 25%, S&P is down 16%, Dow Jones is down 11%. Still plenty of room to left, because I usually do not deploy, I'm speaking of my own personal portfolio, I do not deploy my whole capital. It's all about capital allocation, the sensible allocation of capital. I do not deploy that until and unless this one drops at least 50%. When Dow Jones index drops 50% from its recent highs or from its all-time highs, then it allows me to deploy big chunk of my capital. If it drops only 10%, like how it is right now, the Dow Jones index, it allows me to deploy capital, but only a small portion. If it drops 30% from its all-time high or from its recent high, it allows me to invest more than this, but less than this. So that's how you kind of do that. So right now, this is what I am really looking at. Now, the fund flow is over here is very much referring to which sector is the weakest sector. Is it the tech sector right now that we are looking at? Is it the tech sector which is the weakest? Or is it the industrial sector? Is it the banking sector? Or is it the general weakness in the market, the general weakness as well, which one can see it by looking at the S&P 500 index, that whether that is the one. But one thing is for sure, that right now the weakness in the market is primarily because of the tech sector. And the sector which is holding quite well is Dow Jones, or the industrial stocks are doing pretty okay, because this one is not down that much. This is down only by 11%. The S&P 500 index, which represents everything and everything within it, that is down by 16%. It tells us that there is a plenty of a weakness in the overall market, because now this one is moving towards that 20% correction territory, which will really say it that the market is in a bear market. But this tech one over here is already down by 25%. So it tells us that the tech is where you can get the biggest bang for your buck. Now, let's begin the conversation by looking at the platforms and start defining the levels from there onwards, because that is what we want to do now. So in order to do that, what I'm going to do is I'm going to log on to AvaTrade's Go app, okay? And we're going to look at these particular indices, and we will do a comparison. We will run between MT4 and AvaTrade's original site as well. So again, now what you can see in front of you, this is the AvaTrade's web trader, as you can see it. But obviously, this is the chart for euro dollar, which is not something that we wanted to look. I wanted to pull out the US 500, and there you go. That's the S&P 500 index. Now let's talk about what is going on in the market, why the market is dropping. Now, this is the level that we discussed. We looked at it during our last conversation. The prices are still very much marked on it. We talked about the prices moving quite sharply to the upside from this area, and we talked about the possibility of prices moving from here. But that is not what really has happened, has it? Because what has happened in terms of this particular one is a price actually pierced that one. So now what we could do is we can move this one to the next important level of support. And the next important level of support is this consolidation area. Now, because these are our support zone areas, for any one of you who have seen any of my previous webinars, you would know one thing for sure, that I like to keep my support zones in pink, in blue color, not in pink color. So that is why I'm going to change the color by doing that. So I'm going to change that one. If you're not sure how to do it, you just click on it. This wheel comes over here, and from here we change the color. So what we are looking at now is prices, the S&P 500 prices coming into this particular area of support, which I didn't even know at the time. I wasn't even looking at it over here. I was only looking at the next consolidation of area over here. And then this particularly, what it has shown us is that the prices have moved really from this particular area, right? As you can see from this particular arrow, I'm just going to delete that. Anyways, but that is the area. But now if the price, for example, if the price decides that it is not going to move from it's not, I mean, this particular area is not the strongest area, the price doesn't hold into this area, then the next area of support that I really like is this one. But this is not the ultimate area of support that I really like, because the ultimate area of support that I really like in terms of the S&P 500 index, it actually comes from the weekly time frame. And when we go onto our weekly time frame, what we really kind of wanted to do over here is look at the most compelling zone and the most important zone. And that important zone, even though like, you know, these ones are there, that most important and is zone in terms of the price action, what I really like is going to be coming around over this area of consolidation. So I'm going to mark them with the lines over here, and we're going to change the color to green. So if the S&P 500, you know, by any means it falls, and then I think that there are greater chances of that happening, and come into this area, you know, we are likely to see a massive bounce. But right now, what we really also see is the S&P 500's RSI is telling us that it has dropped to 33. Of course, what we really wanted to have the S&P 500 is to for the RSI to go into this area, because this was something that happened, you know, back in 2020 when the prices kind of dropped to this particular price level. And right now, I'll be honest with you, you know, this is the area, and then after that, if it doesn't hold, we could potentially come over here, especially if recession begins to hit. But we want the RSI to go below that 30, because if that happens, that would be brilliant. Now remember, that's the weekly time frame. If we measure the RSI on the daily time frame, it has already started to move from this one. And this is the previous low, this is the new low. New low is slightly lower than this one. So the chances are that we will still move a little bit more further to the downside, just like how the price action was happening over here. I do not see really greater chances of prices really moving from here. As you can see from here, I think the price is trying to break to the upside, but the chances are that it will probably not happen. Let's look at the US 30 index as well, or the US Dow Jones 30. Now, what we look at the Dow Jones 30 on the weekly time frame really is, once again, we're looking at the daily time frame. This is the area which we talked about the last time. It didn't really work out, so let's delete that one. This is the area that we also talked about last time. This hasn't worked as well, so let's get rid of this particular line as well. This is where the prices are trading. Now, remember, in our last conversation, we talked about this area of consolidation, this candle, but currently the price actually already pierced that, but it's not by a large margin, because that is 5% to 3%. You wanted to give that sort of a room anyway. But nonetheless, I'm not worried about it, because it is the Dow Jones Industrial Average, which is holding pretty decent gains. But what I really wanted to see is, I wanted to see if this particular one can actually come into this, my next area of support, which is 30,886. I am very interested if the market comes into my next area of support. And for me, the next area of support is over here, 3,500 to 3,886. Now, if I change the time frame and go to the weekly time frame, what I really see is, again, nothing changing from here. The weakness is very much on. We have how many weeks of weaknesses now? 1, 2, 3, 4, 5, 6, 7. How many weeks do we have again in terms of weaknesses? Because we can see all these red candles. What do you think? 1, 2, 3, 4, 5, 6, 7. This is the 7th week. Now, although we are trading quite high or away from the lows of this particular week, and it seems like that the price could be forming a bottom over here, but there is no need to get very excited, because if the price, and that is if the price even breaks above that and then changes its direction, we wanted to wait. Sorry, not this one. Delete that. What we wanted to do is come over here. We wanted to wait is, well, what we want to do is really we want the price we want, give me 1 second. So we want the price to break above the highs of this particular candle, because once it will break the high of this particular candle, you could trade at that time. You could place your stop loss below the close, which is where the price is trading right now, 32,359, or the low of this candle, and target this area. I mean, like right now, even that's not a big deal at all, because your potential loss is only going to be this much, right? That's your potential loss. But your potential gain under the current circumstances is really going to be twice that much. So, you know, you got a pretty big room to go in terms of the upside, because this is your potential loss, right? So this is 1, this is 2. So you are more than 2 to 2.5 in terms of this particular trade. So that's how I would really play that one, if that makes sense to you guys. So don't be rushing in, but on the weekly time frame, on the daily time frame, what we really see is perhaps a little bit more weakness coming in. Let's see if that happens. If the price breaks above the highs of this candle, put your stop loss over here. You can take that at that time. Now, US 100. You see that it doesn't really bring me there. This is your last index that we are really looking at. Again, on the daily time frame, what we're really looking at in terms of this particular index is that we're looking at we have to go into our weekly time frame. Let me just get rid of these ones. These are some of the old levels. So what we're really looking at in terms of the weekly time frame is, sorry, not this one, is this particular lows right over here. It's the lows of these ones, right? Or this particular consolidation area. So, but I think that the better area of support could potentially be right over here. Again, this is our support zone. So we're going to change the color into this one to green over here. Let's change this one to green. So I want the price to come over here. Again, I'm not worried about losing out, because if the price, and that is if, right? If the price, oops, it's not allowing me to do that. Let's just delete it. If and when the price will break above the highs of this particular candle, which is right over here, we can take that particular trade at that time, right? So we're just talking about the highs of this one. So the moment the price breaks above that, I will put my stop loss right over here. What becomes my risk at the time? My risk at the time is obviously this much, right? But in terms of a reward, what I'm really looking at is like these 15,000. So it's more than 3 to 1 risk to reward ratio. So once again, let's delete that off in terms of my real cookie right now that I wanted to look at is how the price is performing over here. If it breaks above that, we can take that. Otherwise, we wanted to continue to focus right in these particular price levels. Now, the CPI data will be due very soon. Keep an eye on that, and we'll be back with more analysis soon. Thank you.